We've been doing this podcast for 2.5 years now, and the most listened to episodes are always the ones talking about career and certifications in Treasury. So we decided to partner up with the AFP, the Association for Financial Professionals, so we can offer you a $100 discount code on all of the AFP's products. This includes, of course, the CTP, the Certified Treasury Professional, which is hands down the most renowned and recognized certification in Treasury out there. And of course, the access to the CTP exam prep platform as well. Check the link in the description to access to those discount codes and take your career to the next level. Welcome to the Corporate Treasury 101 podcast. In today's episode, we discuss trends in the payment industry and how they impact treasurers with Bruno Mellado from BNP Paribas. Bruno is the global head of payments and receivables at BNP Paribas. With expertise in cash management and payments, he excels in delivering client-driven solutions by leveraging innovative technologies and collaborates seamlessly with corporate clients, IT organizations, and Fintech partners to navigate market and regulatory changes. BNP Paribas is a prominent European bank with a global footprint spanning 65 countries. The bank excels in commercial and personal banking, investment and protection services, and corporate and institutional banking, providing comprehensive financial solutions for individuals, businesses, and institutions worldwide. In the episode of today, expect to learn what is happening in the payment space lately, what B2B payments, real-time payments, e-invoicing, and ISO 20022 are, how have changes in technology and regulations affected treasurers in the payments world over the past few years, how to make your case as a treasurer to lead your transformation journey, what is BNP doing in this space to help their clients embrace change, and like always, much more. What an episode. Bruno truly is impressive, and Hossam and I loved recording this one in person in the BNP offices in Belgium. We were barely conscious of the amount of regulatory and technological trends and challenges affecting the payment landscape and how that can make treasurers shine. But on top of it, recording with Bruno was actually quite fun. We hope you will enjoy the episode. If that is the case, and when you're thinking about how you found our podcast, chances are that it was through word of mouth, social media, or a recommendation from your favorite podcast platform. And this is our only request to you. The best way you can support the podcast is to head to YouTube and subscribe to our YouTube channel, Corporate Treasury 101. That will mean the world to us and help more people learn about Treasury. And with all that being said, please welcome Bruno Mellado.
Bruno, thank you so much for coming on the Corporate Treasury 1 podcast.
Thanks for the invitation.
Very good. So we're going to tackle a lot of new things that are coming up for treasurers, and specifically from the bank perspective, and also advice for treasurers out of that. So there's a few topics we said we were going to go through. There was the B2B payments changes that are coming up, e-invoicing, ISO 20022, and SEPA real-time payments as well. So a lot to cover, but it's Corporate Treasury 101. So we'd love you to just break down some of those terms for us first. So starting with B2B payments, what's happening in the space?
Okay, no, absolutely. It really requires the necessary time to explain what is the trend. But let me just say that today, you and me, when we go to the shop, we have a seamless experience. And what does seamless means? It means that you decide to buy something, and you have many means of payments, and they're almost all digital these days. You know, the amount of cash being used is being reduced. It's not convenient. Of course, now the question is, how many wallets do you need? How many electronic wallets? You have your bank accounts. And so this experience actually is enabled by different means in which you are paying for it. And on the consumer side, in most of the developed countries, that's already a reality. Now, during COVID, you had business buyers who were used to have, let's say, an older way of buying goods and even large ticket amounts, 50,000, 100,000 euros worth of goods, that basically realized that during COVID, they had to get into a more as well digital way of doing this. And so the sentiment of buyers in businesses started to change to say, well, maybe I'm okay to buy a larger ticket item through a digital experience. Except that it's not so simple, because when you use a credit card, well, the credit card works great if you're buying 1,000 euros to 5,000 euros. But when you start to get into large tickets, then it's not so convenient. Limits come to play. Now, of course, the cards are developing to grow in terms of the ticket items, but basically you end up realizing that you need to come up with a new way of paying large amounts, where in the business-to-business space, the way that things work in corporations, and I happen to have an experience in procurement, which taught me a lot, is that you have a procurement department who has to manage the process of how do I ask for a requirement for goods. I evaluate different companies, and at the end, I make a choice. And that means that the procurement officer in support of the business is managing the process of selecting what I buy, whether it be t-shirts for the military, whether it would be a helicopter. It goes through a process. And this is done through a procurement system most often. Procurement systems there's, let's say, top 10 procurement systems managing most of the procurement. But then when they decide to buy, they're not the ones who are actually deciding to pay. That's information that goes often towards the ERP, which receives the information and then pays out when the treasurer as well, and the way that the treasurer wants this to be done. So when you come up with a digital experience, you can see that it's not the same as when you're a consumer than when you're in a business. You have different roles, different decision-making authorities, different validators. And so the biggest evolution is that businesses want a digital experience. And Gartner, for example, is defining that 80% of business-to-business purchases will be done digital by 2025, for example. And we believe that as well, the trend is strongly, especially on small businesses, paying to big businesses, but this can continue to large business to business. So that's the trend. For example, in France, they've already increased 41% digital sales from 2019 and 2023. So it's growing fast. And maybe just let me explain as well that when we say digital, it's not just about the payment. It's about the way you receive the invoice that tells you this is what you have to pay. It is about how you process that invoice to read what the invoice says. And it is how do you actually instruct the payment without having to retype the whole payment. So a digital B2B payment is not just I pay you electronically. It is I get an invoice, I read it, I verify that it is the right information, I'm able to reconcile, and I'm able to pay out the amount in the best possible way. That's the trend in a nutshell. We see some industries going faster than others. And let me say that while B2C is the first area where things happen, so you go to the e-commerce site and you buy your shoes, the next step was that these same businesses which were selling to consumers said, well, I actually have a business segment and I need to extend this capability to the business segment. So this is one big group of companies that are actually saying, well, I do this in B2C, I want to do this in B2B. But so they're already departing from a current setup and they need to extend it to the new reality of differentiating that the one who buys is not the one who pays. Another set is clearly corporations that are only selling to businesses, selling specialized equipment or specialized construction products. They're only selling to businesses. Well, this is the fastest growing area is the small business owners. So I deliver goods for a construction site. I don't know how much they're going to need because they actually will get delivered a certain amount, but at the end, in the construction, they will end up getting required a bit more cement or a bit more gravel or a bit more things. So you need to manage the way that you send an invoice with an updated amount, the way that the company is going to have to sign, yes, I received so much cement, and then the ability for that information to reach the ERP system to actually send the payment and tell the driver the payment has been received. So that's an area that is growing fast. I believe that's where we have a lot of work to do. And lastly, but not least, is that once you do that, you don't only want to sell your own product, but you realize that in order to have a bigger marketing impact, you need to sell your product plus some supporting products. Imagine you sell a truck. Well, you sell the parts, but maybe you need to sell the insurance. Well, then it means you need to start creating something we call a B2B marketplace. And that it means you sell your product, but you sell the products of others. That adds another layer of complexity, but it opens another set of opportunities in the market. So these are the trends that we're very excited about because it really is transforming and lowering the cost for companies and improving finally the economical activity of countries.
Bruno, that's a lot to unpack. I love that. So to come back on one of the things you mentioned at the beginning, the buyer is not necessarily the one who pays. Our procurement department, and let's say I'm a total newbie in the corporate life, not involved in the how to actually pay discussions. Like, do they just negotiate price and setup and exact product, but they do not look at all that, how it's actually going to be effectively done. Typically the invoicing, maybe I suspect they have a play in that, like how to actually get paid. Do they not talk about it at all, or how does it work?
Well, I think every corporation is different and industries change, but procurement tends to be in control of some of the payment means. Mm-hmm. When it comes specifically to card programs, using a card payments, oftentimes procurement is in the lead of that. Of course, the issue is that not all your suppliers accept the cards, so you need to complement with other types of payments. Mm-hmm. Financing is in the charge of the procurement as well. So when you are giving terms, and when you're giving terms, you have the opportunity to probably provide some type of factoring, so selling the invoice to a third party. Oftentimes it's procurement who's in the lead. And in that case, procurement has the upfront relationship with the supplier to ask and to impose or to require the data that you need to make the most efficient, low cost, and error-proof payment. So we need to link more, and I think that's another big trend, and I hope something that can accelerate is how procurement gets data and gets invoice structured data. How can that be used by Treasury to make the most efficient and low-cost payment? Mm-hmm. But that requires talking to each other.
Right.
And so as an example, I went to see a procurement department very close to me, and I asked them all these questions. And they said, yes, indeed, we've actually launched a transformation program of procurement. We replaced our systems, we redefined our supplier journey, and we came with this single identifier for procurement that we're able to exchange all along the process. And my next question was, did you speak to Treasury? I said, well, not really. I went to see Treasury, and they said, well, we have this transformation journey as well. Great. We replaced our ERP. We're in the latest of the ERP systems, and we came with our unique reference of ordering number in which we are actually sending our payments to our clients and to the suppliers. And then I realized that, in fact, they all had chosen a different unique reconciliation. So instead of benefiting from a unique customer journey for the supplier to go through procurement and then go through the Treasury systems, we still were using different references and not taking advantage of the data that procurement is collecting to improve the supplier databases. Now, I'm sure that there are a lot of companies are doing it correctly. Yeah? This is just an example where if procurement works on their own side and Treasury works on their own side, we will not take the most benefits out of the changes that have to be done in the industry and the digitalization of payments. Yeah. And that's a bit the reality. Some treasurers get the chance to work transversely, others don't, as will affect in the market.
So let's park this one because we definitely want to unpack it, especially on how to actually solve that. Because once you've completed the transformation journey, you're like, okay, we need to find a way to talk to each other. Let's come back to this one a bit later on. You mentioned the companies and where the transformation comes from, like where the demand comes from. It's like COVID who played a role. Some companies that were selling to customers and like started to selling to businesses as well. And were like, okay, I need to have the same capabilities. I'm curious to know about the companies who were mostly B2B, but became B2C as well. I think about all those merchants' websites that you can see right now. I can order my BMW directly from the BMW websites. I don't necessarily need to go to a retailer. So those companies that used to be selling to distributors are now also selling to B2C. And how does that transformation happen when they're like, okay, we're going to do a letter of credit, or we're going to do a check, or like with whatever means of payment they were using between companies. And now they see that they need to support all those plethoric amount of payment systems that they did not so far. So how does that actually affect those businesses who wants to go B2C from B2B?
Well, to be totally honest, I haven't come across that many. The typical use case is I was in the B2C and I have to extend to B2B.
Okay.
So, for example, you're selling sports equipment and all of a sudden you have schools wanting to buy you equipment. Mm-hmm. I haven't seen as many, probably because of what you say, is that when you're selling to consumers, you have to offer basically the more, in fact, all payment means that you have available in order to increase the chances that you get paid. Now, what happens is that you have gateways that exist today where they're able to integrate all the payment methods that may exist. So, for example, if you go to France, you have to propose checks, just as in the US. Right. You cannot do it without it, but you have to as well still collect cash. So you have to have means to collect that cash. And of course, you provide cards, and cards today have a predominant role in C2B payments. So you could do with cards most of the times, but it depends which segment you're in, which country you're in. I'm a strong believer on direct debits because it still is a very simple way to get to collect and to trace and to be in control of the collection, especially when you pay monthly payments or recurring payments. But I'd say exactly because of what you say, the complexity of consumer payments is greater. So I see more often corporate selling to businesses, selling to distributors and asking themselves, should I not go directly to the buyers of my distributors, especially on the business to business side?
And that transition is a bit similar to what you mentioned before, right? You go from B2C to B2B, all of a sudden you got to issue an invoice. A lot of these companies have never done that because it's just a credit card collection.
Indeed, absolutely. And it's not just the invoice, but in fact, what's amazing is that often these teams are very lean. They don't have a lot of people. So if you have to produce an invoice, and we'll come that to the invoice topic because there's big changes coming in, but you have to actually chase, has the company paid me? Have I reconciled automatically that the company has paid me? Can I keep giving goods to this company? Are they up to date with what I've been providing? So, for example, in Spain, we helped a company who was selling to professionals in the beauty segment. And their concern was to say, well, I'm giving them a lot of product, but I can only take so much risk at giving them product and waiting for the payment. So the earlier I know who paid me and how much it was paid, the more I have an up-to-date view on how much it's outstanding, and I can continue giving them more product, right? It's a very basic idea, but at the end, what we looked at is how can you actually have an automatic reconciliation on the payment, whether they go to the pay by check or by card or by some other or cash, is how to make sure that that information goes straight into the ERP and updates the position of every single client in terms of outstanding payables, right? Or receivables from a company point of view. Yeah.
Right.
So move us into e-invoice, which is what I think you alluded to there. So there's some new regulation coming in. What should treasurers know about that?
Yes. Well, in fact, you mentioned treasurers, but oftentimes, and it's very interesting, it's only the tax department which is aware of this regulation, which is pretty sad, and I'll tell you why. This regulation exists since 2014. So it was the EU 2014 55 EU, just to say. And it actually says we will start implementing electronic invoicing on all government purchases from federal to state, provincial. And that was implemented already in 2014, but with a different date for implementing it on all business to business purchase. And that's in Europe, right? Now, the dates, it was Italy who was first on this one. Turkey had done it before, but Italy implemented it already earlier on a specific model. But all countries in Europe have to go through that. And why is that? Is because the government wants to digitalize the way that invoicing is done, and they want to have declarations of VAT to make sure that there's not a lot of fraud happening out there. And so they make this mandatory. And that means that if you want to pay another business, there's no way around it. You have to receive an electronic invoice that contains mandatory data where you're going to actually receive a copy, but the government will get another copy. meaning the government will always know what you sold, what was the VAT in it, what product was sold, and so which company was sold to with unique identifiers. And so it's extremely standardized means and format of sending an invoice and how you send the invoice through which channels. In Italy, it all goes through the government. There's no direct connection, but in other countries like in France, it will allow for a direct sending to the counterpart, but as well a copy to the government system. And so this is going to come into place now, I would say, in the major European countries by 2026. That's the new date. So France was scheduled for 2024. They realized, I think, the amount of change. Now it's 2026, Germany as well, the Netherlands, and smaller countries will go live in 2025, like Croatia, Slovakia, Lithuania. Spain is scheduled for 2025, but with the elections over there, that may take a little longer, so I would not confirm that is the case. Belgium will be as well in 2026. So we'll see that this is going to happen going ahead. And why is it difficult that it's only in the tax departments is that, yes, there is a tax topic. But what people fail to realize is that today we have completely separate process from sending an invoice. And it's like you send the bottle to the sea. And you don't know when you're going to get the payment. So the opportunity for Treasury is how to actually, one, make sure that the data in the invoice reaches the ERP, because that's where you have the most structured data available to make the payment. How do you actually take that data and issue the payment instruction, either through a host-to-host connection, so that you're in charge of that data, or even on an electronic channel for smaller businesses? You could avoid to have to re-enter the data of the invoice. So basically, you can carry it through the electronic channels. That's something we've built at BNP Paribas, is how to actually get the invoice data, populate the payment, have it ready for validation. And so these are the opportunities to save some time. There's some information as well that shows that, if I take France, there's between 2 to 3 billion invoices a year. That's a lot of invoices. The average cost of processing an invoice is 10 euros. That's a lot of money. When you add all the workload, scanning or retyping or processing. And we believe that there's at least a 30% cost gain for companies to implement a digital invoice processing end to end. So that's a lot of 30% of gain of time. Now, does it translate into cost savings? Probably there's a bit more cost savings to be made. But so there's an enormous opportunity to make things more efficient. And that invoice, in fact, if you think about this in concrete terms, it means you have a European format with some still country differences. There will always be. For example, identifiers for companies. In France, it will be Siren. In Spain, I forget what it is, but it's based on the tax number of the company. Yeah. And so you have unique identifiers. You have reference data. You can add reconciliation data. And at the end, this is mandatory data about 30-something fields and other fields that are available to add more information, right? Now, these 30-something fields are the same. Half of them are pretty much the same that you need to make a proper payment. Not only that, but if you make sure that the invoicing channel is safe, coming through the government or from your counterpart through the channels that will be there, you will be able to be certain that the invoice and the account that is mentioned in the invoice is the right account and reduce the risk of invoice fraud, which is one of the biggest costs today in companies today. You receive an invoice, you don't know if the account is the right one. And so that invoicing coming in will allow to lower the security concerns, improve efficiency, digitalize the whole process, as long as you link it to the payments, right? So again, it's not just a tax topic. It's how do I get the invoice? How do I pay the invoice? How do I reconcile it? How do I choose the right data for the invoice?
So the two things are certain in life, death and taxes, I guess, pretty much applies here.
Absolutely. Absolutely. And there was a very interesting statistics in the European Commission website, so I cannot doubt it, which was saying that somewhere we are losing about 4,000 euros of VAT a minute in Europe
Okay.
That's what they consider is the tax avoidance on VAT in Europe today, which is a lot of money.
Yeah. Pretty much a lot.
So in a time when governments need to collect a bit more taxes and to pay a bit more national debt, I think they are probably looking at this as a possible way to recover a bit.
Definitely. And so what's the role of Treasury here? Because, I mean, what's the role? How does it impact Treasury, first of all? So this thing of getting the data from the e-invoice from your procurement and ERP department, and then being able to execute the payment from that. So it's just basically we're in the middle of the chain, and it's like being able to collect the data and process the payments accordingly? Or is there anything else that the Treasury department has actually to take into account?
Well, already what you mentioned would be great.
Okay.
But
To begin with.
But we are in different scenarios. So some treasurers where we come and explain, they say, well, this is the tax department's topic. I'm not involved. Mm-hmm. And they actually ask themselves, why should it be my topic to solve, right?
Right.
So that we get a bit of that. Normally they rethink this through and then they call us afterwards to continue the discussion. That's what I've seen.
Okay.
Other corporates are actually having their management realize that this is a big thing because it's a big change. And they're actually designing who's going to be the transformation manager in the organization. And some cases, not a lot, but I've seen the treasurer being dedicated the transformation manager, which seems to them like a huge task. And it is true, but at the same time, it shows the importance of treasury to be in the middle. Because again, treasury will have procurement on one side receiving the invoices, but on the other side, you have marketing issuing invoices, or sales teams, right? So you have to look at it from a true organizational and corporate perspective. And I would say that the strategic question about this is you could do, I guess, the minimum to make sure that the data that you send out to your customers to get the payment in, or the data that you receive from your suppliers in the invoices, that you're actually making the most of it. We'll speak later on about international payments, but there, where you need structured data on international payments, well, make use of e-invoicing regulation to already get the right data in the right format, in the right place. But the next strategic question, and this is something I learned from Mexico and Uruguay, where they've already gone through this e-invoicing journey, is that you cannot actually get paid if your counterpart, your customer, is not actually being able to receive an invoice in this format, in this structure. And you cannot pay your supplier if you do not have that invoice. And that means that some companies, if they're big and if they want an industrial and secure process, they may have to think whether they should not get involved in equipping their own suppliers to send them the invoices. Give you two examples. In Uruguay, we have a supermarket which is huge and is buying, it's the main supermarket, right? And they have chains. Well, they realize that if they do not give a tool for all their suppliers to send them the invoices, this is going to become a very difficult process. So they actually enable all their smaller suppliers in Uruguay to actually use the same tool to issue the invoices of what they sell to this supermarket. That enables. Now, do they make them pay for this service? Yes, they do. But does it lower their costs as well? Yes, it does. And actually, some of these sellers to these supermarkets, I happen to meet some of them. Some that are actually in the, for example, just selling blankets and this type of home stuff. They were very happy because they lowered their complexity to invoice their counterpart. And not only are they encouraged to use the tool, but they can choose as well the terms and the delay to get paid, right? So you can start automating how you actually communicate to your big client as to when do you want to get paid. Of course, the longer you have, the more discount, and the opposite, right? In Mexico, an example that I had was, imagine you are using your own truck drivers to deliver goods to your customers. But sometimes there's an increased amount of demand coming to the holiday season, and you have to hire external truck drivers. Well, a truck driver is still a business. If you want to pay him, he needs to send you the electronic invoice in the format that is required by the regulation. What do? You build an application so that your own ad hoc suppliers can actually invoice you with the right information. So you can see that it's not just I will stop at the payment side, but I have to think about how am I going to enable my clients, my suppliers to manage the invoices. The bigger the business, the more important this reflection is.
And to take it a step further, because now it's super interesting, Bruno. So I'm curious to know, how about factoring? All the businesses that rely on factoring for funding or part of their funding, they also need their factoring service provider to be able to process all that.
Absolutely.
So it's not only corporates, it's like the whole chain of payments and financing that needs to be changing them.
In fact, factoring is probably the first concerned business about the invoices. It's all about invoices, right? Invoice purchasing, invoice management. Exactly. So absolutely, they have to make these changes. And again, it will lower costs, but before you lower the costs, you have to invest in revising your end-to-end chain. Yeah, absolutely. So that's a big change coming. But you could see that the change on invoicing is big enough. The change on B2B sales is big, and then the change on international payments to paying suppliers is big. But they all share one thing. It's the data that goes in the invoice, the data that goes in the payment, and it requires to think in advance, because you have two choices as a corporation. You will end up doing this project in piecemeal and not being able to see the master plan. And so you will have the investments, you will not maybe take all the rewards, or you can try to create your master plan and try to do this in a way that you make the most out of it, you simplify the most out of it, you decrease the costs for your organization. Some companies in the US which have operations in Europe have asked me, okay, what's going on? And I just tell them, the last thing you want is to do this project for France, because the French were the first going live in new setup, and then have to do the same project again in Germany 1 year after, and in Belgium later on. You will end up doing several projects with the same purpose, especially if you're looking at centralizing your operations, rationalizing your systems, maybe rationalizing your bank partners. You need to look at the master plan, at least regionally. I say it's too ambitious to think globally maybe, but regionally you have to look at it in one master plan.
I mean, as you said about the transition plan for Europe, I mean, my biggest question there was, and then you said, well, you can't get paid if your supplier's not on it, or vice versa. Then, well, if different countries are moving at different rates, it kind of just depends on where are your suppliers and your customers. So if I'm a French company that's got customers in Germany, then I could say, hey guys, you got to move on to the e-invoicing, otherwise I can't get paid this year. And Germans are like, well, no, our master plan is 2027 to have this implemented. Yeah. And then the French company's like, well, I can't get paid until 2027 then, if that means like this. Or like, it's always going to be a negotiation,
no,
right?
This is well seen. So that's not a problem till 2028, where everybody has to do this. So 2028 is the utmost deadline.
Okay.
But so you still have some exceptions because of exactly what you say, where if you have a supplier in Germany, well, of course, he will be able to, he can receive an electronic invoice, but if he can't, he should still get the regular invoice, right? So you still have some flexibility when it goes beyond one country, but this is just temporary. Now, the VIDA is the other regulation, which is being voted this month. Maybe it has done, I have to check my notes. It's being voted now in December, and it is looking at the way that VAT is declared as well, on cross-border transactions beyond Europe as well, to as well do the same thing, is control a bit the amount of VAT that has been generated. And it actually brings that deadline of 2028. So again, by 2028, everybody has to be done. Mm-hmm. Right now, most countries are going at the same year, 2026. A few maybe 2025. Let's see if they make it. And if not, between now and 2028, it will be done in European countries.
But then what about outside of Europe? Again, we live in a globalized economy. China being a huge trade partner with Europe. The US being a huge trade partner. Are they also expected to be able to, or there are also exceptions after 2028 to be able to match? The UK, is the UK moving over to the system as well?
We don't see any sign on the UK, nor in the US. What we saw is basically countries like India, Turkey, Mexico, Brazil, we see it moving. I think countries where you have maybe more of a concern of the declaration of taxes, things, those were the ones who moved first. Europe came after. That's
That's true.
I don't want to imply anything, but indeed, it's not going in a let's say common way. I think it's all in the objectives as well of transparency and a fight against corruption. So these are global values, but it's not going at the same space everywhere. I think local and domestic trade is like number one concern, and then regional. So in Europe we have a regional regime, so that's why it makes sense. But after, I mean, this is a cost on the businesses as well. So everybody has to judge at what time they impose this, right? Mm-hmm. And these are costs. I mean, at one public event in France, the company Orange, which in telecoms, they were mentioning the multi-million cost of doing the project to revise all their databases with all the data that they need to issue the right invoices structured, etc. So these are, depending on the quality of your data and the state of your data, these can be actually significant projects to be carried, and they have a cost. It's a true. They have benefit, but they first have a cost.
Yeah. Then same question for a French company that has a UK customer base or a US customer base. Are they expected to?
They're not obliged to, no.
Okay, but they can still receive payments in the other system in the traditional way?
Payments will still be payments.
Okay.
It's more the electronic invoice. Okay. That they are not obliged to receive or to send.
Okay, but then they have parallel systems then.
Well,
they
potentially can have parallel systems,
which is also going to drive its own complexity as well.
Yes. So there's a way to try to simplify that. Okay. For example, when you are the way that the structure that we've set up for BNP Paribas is that we help our customers which have multiple systems, because that's the other thing. Companies have often several ERPs producing invoices. So you cannot do this project all at the same time on all ERP systems. Mm-hmm. So what we built is a two-step approach. One is a system that allows to receive the invoices as they are, whether they are PDF or whether they are CSV files or whatever, into a common platform that translates this dematerializes this in the right format, that checks whether you have the required data that you need. And then it sends it to the second step, which is the type of companies that have now, and there's a few in the market, but we've chosen one, which has a role of compliancy with the taxes. And so it says, this invoice is going to Lithuania. These are the requirements. It goes kind of like a clearing system. In a clearing system, you send a payment. If he doesn't have the right information, it gets rejected. The same thing. I send this to this partner. He checks. It has the right information. It goes through this route. I send it to the right counterpart. This other invoice, it goes to Spain. In Spain, they added an extra piece of information. Watch out. This invoice doesn't have that piece of information. You're going to UK. In UK, there's no specifications. Okay, let's go. Right. Mm-hmm. So basically, you end up having to have an additional partner in the chain, which is going to play a role of compliancy towards the tax authorities.
That was going to be my next question. What platform is all this happening on? Is there an EU regulated platform? Because you said a copy goes to them. Or are there third parties coming in? Or are you doing this in the traditional banks as well? Or?
So the reality is that countries still have specifics. So, for example, in France, they came up with a great platform, Chorus.
The government did?
The government.
Okay.
That's just France. In Italy, they have another platform. I don't remember the name, but they have their own platform. Every invoice goes through that platform. In Germany, I still don't have a view on how this is going to happen. But you can see that there's always this country. At the end, tax authorities are today very country-based.
Yeah.
There's no regional tax authority. So you will have multiple set of platforms that have to receive a copy of those invoices. So that adds complexity. But you can see that if you build your systems to send out an invoice to the different platforms, you have to look at this as a regional project, because you may want to simplify how you send flows to platform X, platform Y. Depends where your treasury is, where your ERP is. Do you have one? Do you have several? One per country, one centralized. That's really each company and each situation will be different. If you're a telecom provider, probably you're very local, that's fine. But if you're a good producer that is having several factories across Europe, you have maybe several systems, unless you've gone all the way to a centralized treasury operations, right?
So, Bruno, Sam and I consider someday launching our own software. Is creating a fintech in e-invoicing the place to go then? Like aggregates everything?
Well, I met some of them. I met a lot of them, and we have partnerships with some of them. That's a good question.
A bit late.
Certainly, something we learned from speaking to other countries and other parts of our bank which have gone into invoicing, like India, where BNP is present, and Turkey. Certainly, managing an invoicing platform is extremely difficult because you have to stay up to date with the regulation, and it always changes, right? So it's a business in itself that requires to have people who are expert on managing e-invoicing. The second point is that in some of these government guidelines, they are having so many requirements as to security and, of course, robustness and all certification requirements, which I think were underestimated by the industry of fintechs at the beginning. Mm-hmm. And in fact, it actually reduced the business case of being certified by the government. And so not all are getting certified by the government to play a role that is called the PDP, which is basically a certified provider of this type of service, right? And so the game plan has been, there's some invoice companies which are fine, but they will have to work with partners which are certified by the government based on that information. And again, it's more about security, cyber security, resilience, et cetera, et cetera. So we expect, for example, in France, if we take it as an example, that there will be maybe 50 to 60 PDPs for the whole country.
Okay.
Which means that there will be, there can be many invoice software companies, but they will have to partner with one of these companies to actually feed the government platform.
No.
Right. So it's a business that gets fragmented. Now, the other question that you have to ask is to what extent the invoice software has to be an integral part of your accounting software, and to what extent can it be separate, and to what extent is it separate to do sales and separate to do procurement. So again, it's about corporate architecture. Do you have one invoice system for your procurement to receive the invoices? Do you have a separate invoice system to send your invoices to your clients? How do you link it to your accounting system? Should you expect your accounting system to do that job for you? So that's as well part of the evolutions that are taking place, discussions that are taking place in different software companies. We partner with some of these software vendors to provide our customers with ways to comply with the e-invoicing. But again, they tend to be challenging to integrate, because then that means you have to open up a project to integrate a new piece of software to do one specific step of the process. So, it's a question again of a master plan for how do you do your business and adapt to your invoicing requirements.
So I think that means we probably shouldn't get into the invoicing space, but fair, that's totally fine. Bruno, talk to us about ISO 20022. What is that? Beyond the series of letters and numbers, what does it mean, and how does it affect treasury departments?
Well, as I always try to tell my management, fortunately, the format of international payments changes only every 40-something years. So this is a major change in the way that the format and the structure of the data for international payments is shared. First, between banks and central banks. And so that in Europe, for the euro and for the GBP, that has been done this year. So basically, these two central banks now communicate for payments only in a new format called MX, which has different numbers. But at the end, you have to imagine that basically you go from a poor format that was doing the job very well, and you move to a rich format, which means you have a lot more fields that you can call what they are. So just as an example, if you had to find the country in your message, you did not have a field that is called country. Now you have a field called country. So if you want to know which country this payment goes to, you have the field called country. So it sounds very simple. I'm trying to oversimplify, but I'm saying XML allows you to do that. You have more fields, and that means it opens the door to other possibilities. So if you're making a payment on behalf of a company, so think about all the centralized treasuries. There's about, according to PwC's recent survey, we have about a 70% plus strategy of large corporates that are setting up centralized payment factories. You basically have the ability to do payments on behalf and call the on behalf in the field that says, who are you paying on behalf? And that allows for better transparency of the payments, better screening of the payments, better reconciliation of the payments. So these are simple benefits, but before they were not possible. So basically the format has changed between now central banks and the bank. Now in November 2025, it has to change between banks and other banks. So what they call the many banks to many banks. Now, today across the world, we've reached, unfortunately, only a 15% percentage of messages that are made in the new format, right? So that's certainly far from where we want to go. So this is going to be a long journey. BNP Paribas today for corporate payments, we are at 80%. Other banks have as well similar amounts, but for the general number of banks, and again, there's about 11,000 banking entities across the world, about 450 banking groups across the world. Well, it's going to be a journey of having to modify their payment systems so that they can produce new format with new data and to be compliant. So 2025 November, all banking entities have to be able to receive an MX message and send an MX message. Now, what's going to happen probably is that at that point, for clients or for corporates that have rich data in their files already, because some are already, corporates have already been ready for earlier than banks, well, they will start using their rich data for international payments, and some banks will be able to convey that data all the way through, and some other banks will not be able to convey that data through, which will create a problem for some of the banks because they will be not being able to cope with that extra data. Now, to palliate for that problem, Swift came up with a solution called TMP, which actually is a platform, cloud-based, API-based, and all the bells and whistles that basically allows you...
Does it have AI?
It will. Soon. And basically, they managed to get the first message that maybe it makes rich. They have the same copy in the cloud so that it allows you to see how that message is modified along the way. And so if the receiving end, you know that some data has been lost, you can still recover that data, right? So that kind of palliates the problem. But still, the requirement is that all banks are able to process in the new format. So that's the change for November 2025. Now, what does it mean for corporates? At that point, it doesn't mean a lot for corporates. They don't have to do much. But what they have to be ready for is that by 2026 November, they're going to have to introduce some structured data in that format for payments to be able to go through. And the requirement has been discussed a lot in the interbanking community, and it has been reduced to, I think, a acceptable level, which means only the address, the city, and the country have to be called out in structured format in the format. Now, structured address sounds like scary, but to give you just a reference, and that comes from my team members who were kind enough to show me. Basically, when you use a map in Google or something, when you enter an address, what you get is a structured address, right? And if you look at the source code, you will see the structured address. So it's just something that is used by you, by me every day, but basically has to as well be available in the message so that you can actually clearly know which country, which city. Today, when the banks screen the messages, they look everywhere for the country. Well, now they will be able to use just the field that says country as more efficient, It's going to be more correct, and we're going to ask less unnecessary questions or stop payments for the wrong reasons, right? So that's the big change for ISO. Now, again, it only happens every 40 years, but it opens a set of opportunities for the next 40 years. So if you want to see all the benefits in the first year, most likely you will not see them. This is about creating an opportunity for growth in use cases that bring more structured data, which feeds better databases to apply maybe AI. That's clear. It allows to maybe add some use cases for remittance data so that you can actually reconcile better. Yeah. If in an industry you agree on some remittance data, you can do that. In Belgium, we are used to the remittance data structured communication. Yes. So in Belgium, when we speak about reconciliation reference data, they say, well, that exists for a long time, but Belgium is unique. True. It doesn't exist anywhere, right? True. So if you can replicate that Belgian example to an industry level, segment level, cross-country level, you can have the same efficiency of a direct reconciliation.
And making the link to the two previous topics we touched upon, that leads perfectly into just that, the B2B payment, how to have the proper data, how to make sure everybody is on the same page. But most importantly, for the e-invoicing, like all those data we'll be able to get through the invoicing that is now completely done digitally, linking with the ERP, having the proper things, having the proper data to link and have an ease of reconciliation. It's a bit like all those changes arrive at the right time then, because we're going to be able to embrace this whole environment of changes into the processing of payments.
Well, they arrive at the right time, but in what you said, imagine how many teams are involved in a corporation.
Tons.
So you need to coordinate that. Otherwise, you'll end up doing A and then find out you have to do B and have to redo your work so that you can actually accommodate for the next change and the next change. So it's an exciting time for treasurers and banks and consultants, I think, because this has to be looked at with the right lens, with some distance.
Sure.
Of course, pick the right consultants. That's
important recommendation.
Important. But something I wanted to add as well is on the international payments. Let's say that the opportunity, of course, is you have all of a sudden this highway of data that is possible, that you just have to figure out what do you want it to use for. Is it for fighting fraud, for fighting anti-money laundering? Is it for better identifying your payment factory members? Is it for reconciliation? So we still need to work on the use cases. But one of the clear use cases where we feel that this is the right time is to move from a cross-border payment to a cross-border instant payment. Instant payments today are already rich formats, same XML, maybe not exactly the same standards, but not far. And so what we see as a clear opportunity, and we start to do that already, is to go from corridors that allow to start the first leg on an international payment and the last leg on an instant payment. So that gives you the cross-border instant experience. And if you look at the statistics officially from SWIFT, basically we know that today 80% of the payments are credited to the beneficiary bank within 1 hour. People don't know that. It's great performance. The problem is that once it's at the beneficiary bank, it still takes more time to credit the account of the beneficiary. Statistic-wise, we look at 60% of payments are credited within the same hour, which means 40% of the payment take longer. Sometimes there's compliance topics, of course, so there's compliance not just from the individual, but compliance requirements from the country perspective, the currency perspective. So there's good reasons for that. But so what we believe is that if you're able to do the first leg of international payments and the second one to go into a local instant clearing, you will be able to bridge that gap of the last 40%. But to do that, you need to know upfront what data do you need to go into the instant payment system and succeed your instant payment locally, right?
Yeah.
So that's the next step, and that's a very clear benefit. When you pay abroad, you will have the notification. It's done within a few minutes, maybe, maximum 1 hour. That's a bit the idea.
Yeah.
So overall in the RTP space then, what other trends are you seeing coming along? So one is this use of structured data to be able to help with clearing and whatnot. What else is coming in the overall RTP, SEPA space?
Well, it's the right question at the right time. Let's say that there's a whole world and To give you a perspective on that, today there's already about 200 million instant payments a year. Billion. On these payments, most of them are actually in India.
Most of the payments are in India?
Interesting.
More than 50% of that.
Of global RTP payments are in India?
Yes.
So to just pause on that, Bruno, because it's the second time you mentioned how India is advanced on this. How come? How come India is that much at the forefront of the payment transformation journey? Well, invoicing you mentioned as well.
Yes. Well, I think their government has been clearly very strong at advancing the country in the next generation. And we speak about India as the next growth powerhouse of the world. And I believe that's probably right. So government policies. Then we had COVID, which accelerated things. Mm-hmm. And we had a very good technology country with a lot of technological savvy people who had a application to pay, an instant clearing system to use, and there was COVID, which made sure that people were paying more digitally instead of using cash and coins, etc. So you put those three together, and the adoption of instant payments in India has been a clear success. Wow. A European example, just to say that I think is the same method, is Spain. Spain in Europe. I mean, I don't know how much people know about it, but it's a great success of instant payments. They're above 50% now, so there's more instant payments than regular payments today. And that's, again, same recipe. They have an app. They have an app that is it's basically the same app used by all banks. Simply they can have their own colors, but it's interoperable. So it's one app for the country called Bizum. They have a great clearing system, which is very forward-looking and with Europay. And the banks pull together as a team and says, let's create this instant payment and Bizum adoption across Spain. And that has been a success. And it's a great experience for the rest of Europe. Now, in the rest of Europe, we have the same initiative with Wero, which is the new commercial name. Have you heard about Wero?
I haven't. Taking us, no, didn't hear.
Been out of treasury for too long.
It's not treasury. This is not treasury. This is actually consumer payments.
Well, that's why.
Yeah, that's why.
So it's fine.
That's why.
Never pay.
No, but the original name was the initiative was called EPI. Okay. You probably heard about that.
I've seen that.
All right.
I've seen the icon.
All right. So that initiative is, again, trying to recreate the same recipe, which means we will standardize a common application to start 4 countries, the Netherlands, Germany, Belgium, France, and Luxembourg, so 5. And they will actually have a common user experience, banking on the existing systems, which were already doing very well. Basically, they acquired the existing local systems, and they will create a unique application experience linked to instant payments. And we expect this to be a true game changer in the adoption of instant payments. Right? Now, just to complete the story of India. So India is it's representing most of the volumes. Mm-hmm. Second is actually Brazil.
Okay.
And we see in Brazil, in BNP Paribas Brazil, instant payments are just growing very high with the rest of the community. It's called PIX, their system. And third is China. You would expect China to be second, but no, China is third. So that's a bit the situation. This can change. By the time you listen to this podcast, maybe the figures have changed. This is going too fast.
Fair.
But in Europe, what's happening is that the European Commission has said, we want instant payments to become the new normal. A new normal means you use instant payments for everything, from paying your gardener to paying the bakery or your peer. And to do that, they just came up with a text that has been agreed, and this is in record time. They almost never have this kind of regulation in such a time. They came up with a text in November, agreed by the European Commission, the Parliament, and they are going to vote this in February to have it go live in March. It takes 20 days to be published. And that regulation, what it says is, whatever you do on a SEPA Classic, you have to do that on a SEPA Inst. Same features, and you have to meet the 10-second maximum speed between the moment that you click on the button as a user and the moment that the money is in the account of your counterpart, and the notification the payment succeeded, which is today the case. Today, instant payments are taking on average 1.5 seconds, but it just means that you have to really increase more the notion that, instant payments is always going to work in a fast model where you start and where it ends. And more importantly, they want to fight fraud. one of the biggest deterrents for instant payments is the fraud, because once the money is gone from your account, it is gone. So what they introduce is a series of measures that actually says you are going to have, as a user, you're going to be able to say how much instant payments you want to do in a day. I only want to pay for 1,000 euros, or I only want to pay 5,000 at the end of the week. And that's a lot. Huh? Mm-hmm. But what I mean is that you can manage the limits of how much you're willing to pay on instant payments. And you're going to have to apply certain verifications of knowing that the counterpart you're paying is in the name of the account of who you think you're paying. So if I send a payment to Guillaume and the name is not Guillaume, it's Erica, it will say it's not exactly the right match. And you can still pay, but at least you know that it's not the right match, right?
So that's a payment and payee identifier issue. That's not an instant payment issue. Whether the money arrives.
You're absolutely right. I love it, because that's exactly the argument I'm always saying. Mm-hmm. In fact, that kind of experience, you have to have it in all your payment types, whether you pay SEPA Classic, SEPA Instant, or international payments even more. So the notion of instantaneity has to be married with the notion of pre-validation. That's a key word I want you to keep in mind. It's not very sexy, but it's very important.
It works.
Pre-validation, it means that instead of thinking that you made the payment and let's see if it works, you actually pre-validate that it will work and it will succeed. When you pay internationally, it means you pay to India. You know that you have the right data for that Indian correspondent, Indian beneficiary, that you know that it's actually the right person you want to pay, or that it's closely the same name, and that you are compliant with the requirements from the country when it comes to compliance and additional control. So why would you send the payment if you know that it's going to fail, right? So you pre-validate automatically that it is going to succeed. So somehow the banks are going to, and not only banks, but all payment service providers are going to have to create the ability to give the view upfront of what's happening. We've built that in France, and now in Belgium, going live in February, a payment experience for international payments that basically tells you, where do you want to pay? UK. Okay, this is how much GBP you're going to get in the accountable beneficiary. We guarantee that. This is how much you're going to pay in terms of exchange rate, transparent. This is the data that you need. And it will tell you, yes, that's all the data you need, or you're missing something. That idea is that you pay internationally, you know it's going to succeed, you know how much it's going to cost, and you know how much your counterpart will get in their account. That's the notion. Transparency, flexibility, and that's a pre-validation.
Now, right. And what's in for the corporate, the only thing I can think of is interest rates. In a period where you want to be able to sit on your cash as long as possible, and potentially on the supplier side, the person you're paying as well, the fact that the payment doesn't get stuck for 1, 2, 3 days, depending on which region you are in, the fact that it can be in 10 seconds definitely enables that. Like, I don't have to pay D plus 2, I have to pay at D, and I can sit on my cash at a 5% interest rate for that much longer.
Yes, so absolutely, that's a benefit, but I would say it's more about predictability. Most often when I speak to treasurers, it's not so much the speed, it's not whether it's 1 hour or 2 hours, it's that I know it will take so much.
Interesting.
And of course, many of the mistakes that I see in the industry about payments not going through are not very good reasons. Mm-hmm. And sometimes it's a matter of questions going back from the last leg in the correspondent to the next one, to the next one. So what we're able to do with pre-validation is to know that all requirements along the chain are met. And what we're able to do with TMP, which is this idea of a platform of SWIFT, is that we're able as well to get the question back to the origin without having to go person by person by person before it gets to the origin, right? So these are evolutions to make payments more efficient and more correct every time we make them. Huh? And so going back to the instantaneity, the regulation that will be voted in February, because that's very important, has as well the requirement for all payment service providers in Europe, and so everybody who has a license to make payments and which has a SEPA payments today, to implement SEPA Instant within a given time frame. Mm-hmm. So within 9 months, they have to be able to receive. Within 18 months, they have to be able to send. Within 33 months, non-euro countries have to be able as well to propose instant payments, SEPA instant payments. So this is going to be a major as well requirement on many service providers, which maybe today they don't have a use case for instant payments. It happens, but it is the ambition of the European Commission to make sure that instant payments are used as much or with no discrimination of using it or not. Pricing as well, aligning the pricing between SEPA normal transfers and SEPA instant transfers. Interesting, indeed. So that's coming ahead, and that we expect is going to improve. But I still believe that is the common application, the interoperable application in the hands of the consumers, which will still be the key game changer to adopt instant payments. Mm-hmm.
So I'll go back to one of Guillaume's earlier questions. There's a lot of things in payments happening around the same time.
Yes.
So how do all those concepts link with each other? So what's 2030 going to look like I relate it back to treasurers again. As a treasurer, I have to make payments and I have to receive payments. I have to do them on time. I want them predictable. As you mentioned earlier, I'll have e-invoicing to handle as well. Make sure that system is up to date. That's correctly working with my ERP, my procurement team is involved, my tax team is involved. What does 2030 look like for treasurers? What's the new normal going to be?
Okay, I think it's important to know that first, before I get to 2030, it's about the transformation journey.
Yeah.
So the transformation journey is
going to be painful.
Key, right? It's painful, but it can be exciting. And I still believe it's a great opportunity for treasurers to put themselves at the center of their corporation, to not be on the back seat, but to actually be part of the strategy of the company. And I see that happening in some treasuries. So it is possible, but still is not most of treasury, is part of treasury. So if I think about 2030, the question should start not from treasury, but from which are our sales targets, which are our new segments, which is the way in which we will increase sales. In fact, that's reflection number one. Reflection number two is what's my role towards my suppliers. We've seen a change as well of geopolitical changes in terms of where am I going to be producing, a requirement to have parallel supply chains, which means oftentimes different currencies, because when you are in Asia, you may want to have another location somewhere else a bit farther away from Asia to have a double continuity of supply chains. So I think the discussion starts always with your supply chain strategy, your sales strategy, and then you can engage into, okay, how am I going to get paid and how am I going to pay? Mm-hmm. And that's where the treasury comes in. So to get paid, how can I help the sales to increase the chances to get paid, certainly with the least amount of cost, and supporting my clients? I'll give you one example. Some of our clients come with generally an objective of 20%. I don't know why 20%. 20% increase sales by providing short-term financing. It's something that is a lot today in the agenda. And basically it says, if my client is having a hard time during these tough times, inflation and economic downturn, if I give him 30 days or 60 days to pay me back after they got paid by their own customer, they'll likely buy more from me. So I can differentiate myself, I can support them in their business. And by the way, the financing can be improved. The cost of financing can be improved for them. In a world of data, you are able to validate that they are typical clients that pay on time. You're doing generally one financing at a time. So you're not engaging yourself into huge amounts of financing. You go sale by sale. So you're able to see that the clients are paying previous sales. And so they come to us in the banking sector to help them to put in place these kind of programs, which include sales. So sales is in the lead. Normally there's a techie guy trying to look at the website to see how to integrate that option. And they say, I want one single API. Okay, you want one single API, and there you go. And then comes treasury to say, well, I want to receive this with this pricing and with this information. And I want to either sell this invoice to factoring, or I want to finance myself part of that. And this is where as well the financing strategy comes into place, where the treasurer can help. And the treasurer gets the benefit of more predictability. Going back to that, is I am getting paid always when I want to be paid. If I give this to factoring. I know when I'm going to get the money in my account, so I have ability to do better cash flow forecasting and improve working capital. So the trend for 2030 should be, what's my strategy of sales? Which new segments I want to reach? Which new markets? Which new currencies? Strategy for 2030 should be as well on the supplier side. Do I want to finance my suppliers? My suppliers have to build 2 more factories because they have to face new geopolitical changes. Do you want to help your suppliers to get some help from you in terms of financing to cope with this difficult time of having to rebuild the supply chain? And again, you go back, how can I finance them? There's supply chain finance topics as well, but simply as well choosing the delay of terms. There's a regulation coming into Europe about terms.
in 2025, 2026.
Exactly. Which is not voted. It's far from that. But still, it's by the time you read this podcast, maybe the regulation is already there. Nevertheless, financing is a question about the relationship that you have with your suppliers and your clients, right? So again, is it a treasury topic? Maybe. Should it interest the treasurer so that he can help his counterparts? Yes, I think it does.
This trend about helping your customers with the short-term finance to increase sales, just quickly touch on that. So that's the target. Like, have you seen that actually working? And if so, I'm guessing certain industries it works better in certain industries than others, just the dynamics of certain industries.
Yes, absolutely. So I think it's a growing trend, and which started in B2C. So again, remember my story about B2C, B2B. So in B2C, Klarna and all these companies, and now we bought as well one of these companies called Floa in BNP Paribas. This is the trend of financing consumers when they buy from businesses. And so that exists, and it's growing quite a lot. And then when it comes to businesses, there, especially small professionals, again, they are asking for the same. The advantage of small professionals is that you have data of them. These are repeat customers. They're coming to buy goods from you. Then you're actually able to help them to come back to you and to order again and create that fidelity topic. It is a reality, but it still is, I think, in very early stages. I give you one example. So when you have equipment manufacturers, your PC, for example, these type of companies are selling online to you as an individual. But you as a business, you still want to have the option to pay 3 times, or to pay in a leasing format, or to pay with a loan. And so this is where the financing options have to be embedded in the digital strategy. And not only do you get the financing online, but you have to receive the collection from that at the term when you expect it to be paid, right? And so that trend is there. We get a lot of requests from clients. I mean, I'm working on more than 20 client cases right now. And what's interesting is that some of them have a large RFP with several parties, and then they realize the magnitude of this change. And they say, well, let's put it on hold. I want to rethink, where do I want to start? Let's start small. That happens quite often, by the way.
Right.
Others, they actually do this to learn. So they do RFIs and they say, I want to see the whole set of things. And then they say, well, let's start by a small piece, right? So this is the trend right now. But I think the more companies start to be the first adopters, the faster the competition will follow, because they say, well, if they're offering all these types of financing on their page for businesses, I want to follow the same, right? And especially if they have a strong B2C business and they want to include the businesses in the mix. But it's financing, it's payments, it's sales. That's really the mix.
Yeah, what else?
Yeah, but remember that in B2B, you always have the thing that the person who's buying on the website may be the one deciding to buy, but you still will get paid by a separate team, which is managing the accounting or the accountant or the. So one evolution we have in the payments landscape, which is very important, and we are issuing a statement on this in Europe, is something we call SEPA request to pay. And it could be a request to pay, just to call it short, because it should exist not just on SEPA. But that's the idea that when you send an invoice, in fact, it's like when you go fishing, you send the bait, but you want the rod to bring back the payment, right? So request to pay is a message that shares pretty much the same data as an invoice or a subset of that data. It gets to you, and you receive in your ERP the reference to that invoice, and it asks you, do you agree to pay? So when you respond, yes, I agree, I know that you agree with the invoice, which is step number one. I remove commercial risk. It's cheaper to finance. Step number two is to be paid in 30 days. It goes into your system to be paid in 30 days. And step number three, you pay after 30 days. And guess what? The references that are in the request to pay are taken into the payment, and I'm able to receive a payment that I can reconcile directly. So this message is the only thing that exists that links payment and invoice. And remember, the invoice is received by one and approved by one person, but the payment is sent from another thing. So it's a way to keep these two things connected. Yeah. Now, it will require all banks to implement it. So it's not going to be, let's say, a fast evolution, but it's certainly one that we are pushing at BNP Paribas with other banks, because it creates efficiency in the way we manage risk, the way we manage efficiency in the treasury, the way we manage reconciliations.
Bruno, I'm going to have to play the devil's advocate a bit, because so we mentioned all those changes, all the department involved, that you can have a transformation manager that sometimes is voluntarily designated and can be the treasurer. It's not like treasury teams are not busy already. As you said at the beginning of the interview, those are lean teams as well. Treasury departments are usually not big. Eventually, with multi-billion dollars company, they are big, but it's not the biggest department of a company, that's for sure. So if I were a treasurer, could I simply not just say, okay, it's all happening, I'm seeing what's happening, and let's see what happens eventually, and we'll cope with it? Or why would I need to be in the center of the transformation if I'm already busy doing my trades, managing my cash, making sure I get paid on time, optimizing for working capital? Like, where does that sit into the overall scheme of a day-to-day role of a treasurer?
Well, every company is different. Some are more centralized than others. So I guess there's certain things that are not generic. And if I mentioned how to approach it, it may not be the same for every treasurer. But I would say that in anyone's job, and me as head of payments, if somebody else is making decisions that will make me be upset every day for the next 30 years, I prefer to have my say now. And you know what I mean.
Fair.
So as an architect of how treasury works, the treasurer is able to play a functional design authority role, at least, to say how things should be done in terms of relationship towards the sales teams, for how you will collect the data, or the data, and how you will receive the payments. And if you are able to tell procurement how to recover the data necessary to make payments, you will have probably a lower cost of ownership of your treasury setup. The issue that we have now at hand is that a lot of changes are happening in the next 2-3 years. So it's an opportunity, because then you're able to combine 2-3 changes in your end-to-end sales to procure chain, and try to look for optimization of these changes so that you don't do them twice. And that's a nice story to bring to your management. Or you're able at least to anticipate these changes and inform your colleagues about possible impacts of what they're doing. I'll give you again an example to be very concrete. Most procurement systems have plans to make payments directly themselves. Makes sense. You receive an invoice, you agree with the invoice, the procurement is agreeing with the invoice. Why not just pay it? You have instant payments, you have cards. Let's just make the payment. Now, when you're taking the lower set of supplier payments, non-strategic, small amounts, actually, why not? For treasury, that's great. But once you start getting into the 1-2 million payments, a bit more consequential, it actually requires the treasurer to have a say. When does he want to pay? When does he want to actually, in terms of working capital, when is the right time to do them? In terms of currency management, do you really want this to be done with a foreign exchange, or do you want to actually use in-house bank type of currency availability? And so it requires to not lose the grip on payments out, or not lose the grip on how and when you want to collect from your customers. At the end, you know that the end result is the working capital. So if that is your main job, you have to have a say on how you pay and how you receive. So as much as procurement systems have plans to include payments, sales teams have marketing departments which are very advanced on solutions where they as well are saying, well, I only want to collect via a specific wallet. Okay, great, but that's not going to hit the treasury, right? So are you sure you want to do that for large amounts, for business-to-business clients? So I've been in situations where treasurers come with us to meetings with marketing, where marketing has already architected the new e-commerce strategy or marketplace strategy, but has not really consulted the treasurer as to how they want to collect the funds, right? So the idea is not to find yourself after the fact, but to actually take the lead and be involved early in the process from these strategies. Yeah, that's what my advice is, that I think Treasury has an important role to play, safeguarding the working capital, optimizing liquidity, optimizing the use of currencies. Now, teams are very small, absolutely. And so what you need to realize is that you need external help. And I think they will realize that, to do this analysis, to work on these projects, you need additional help that is specific. But if you combine 2-3 projects, it's easier to justify a team than if you only take it one by one, right? That would be my second advice, is I think they need to make the case to have a small team to help them, to help on the data, help on the architecture, help on the changes. And I would say number 3 is you do have other changes in the organization that have nothing to do with these trends. The number of clients that are replacing their ERP, or that have plans to centralize, or that have plans to create or better use an in-house bank. So these changes help you make the case to advance a bit more forward and faster those more structural changes. Use them to your advantage. It's the time to do them. And instead of being looking as a cost center, this is your chance to show the value of an impactful treasury across sales and procurement, and be the partner of those teams, basically. So that's what I suggest you look into as a corporate treasurer. It's easier said than done, but I'm very hopeful. On discussions I've had with several of them, some of the events in France or in Spain or in the US, is that they realize that new technology out there is allowing their business to do new things. And whether it's going from B2C to B2B payments, or whether it is to digitalize the way that sales are happening, they are getting involved now in choices about how to do things. But it requires the collaboration between sales, marketing, support, procurement. When it comes to instant payments, it's true that, as much as you have procurement making choices about payments that you may want to have a say on, some examples of some of our clients trying to automate processes have shown that if you integrate an instant payment at the time of an automated process, you remove some noise on treasury, because then payments are taken care of without having treasury intervene. Claims. Every single business that has to pay claims, if the claims is standard, if the claim has a form on the website that allows to request a claim, you're a standard client, you're a known client, it's a standard claim, you did something that's in your contract, you can validate that online, put the instant payment API directly, get it done. You don't have to deal with it in your treasury, in your back office, or in your systems, right? So yes, you can integrate payments up front, but make sure that you're the one saying these payments yes, and these payments I want to have a say on, right?
Super interesting. So, Bruno, walk us through, you gave a few advice already for treasurers on how to embrace that change. Earlier in the interview, you mentioned treasurers can be at the forefront of this change and not necessarily take a backseat. Like, it's the opportunity to be in the center of the transformation. Can you walk us through that? Like, how would you advise treasurers on how to embrace that change actually in practical terms? Like, hey, those regulations are coming. Those are things we're going to suffer from if we don't act on it. But it can also be an opportunity. That's the whole thing behind it. So step by step, what do you do? Do you do a kind of as-is analysis to say, those are the changes, this is how it can impact us? Design behind it, business case and so on. How does it actually need to be happening within the Treasury Department and at the head of it? when communicating to the leadership?
Well, I'd say that maybe I'll explain you our journey with Treasury, and that will probably help to explain how we see this happening. We have created a first thought leadership product that gives a view on what regulation is coming, some use cases, and some best-in-class treasurers. And we've done this together with SAP, which is the main ERP for most of our customers, PwC, EACT, the European Association of Treasurers, and BNP Paribas. Together, we build this kind of thought leadership document that allows to give examples. Something else we do is we bring treasurers together at something we call Treasury Board in countries like in France, in Switzerland, in Singapore, in the US, or we create a European Treasury Board where we put together treasurers of similar complexities. It's not about segments or business lines, but it's more about similar size, complexity of operations. And we deep dive into some of these major changes like e-invoicing, like ISO, like international payments or liquidity management. And we try to reflect on the main pain points and things that have to be solved at treasury level. And that creates as well collective intelligence at the end to say, yes, that's actually the real problem. And that creates that notion that something is possible to be done. And if others are doing it, maybe I need to do them. So peer pressure is always useful, or at least comparing yourself with your peer. That's always very useful. And then the next step often is that we are then invited to facilitate workshops at Central Treasury. Oftentimes it's first with the Treasury team because they want to be in better control of the information about what's changing. And then, if possible, then with the related teams from marketing or from procurement. What I hear very often is, procurement is very busy. Procurement doesn't have time. Procurement has a transformation program. Procurement is not available. Fine. And so what we need to change is that the Treasury has to be able to put this in the agenda of the CFO so that they can bring procurement to the table. I'm just generalizing. Of course, procurement and treasury in some companies have a great relationship, but it is true that oftentimes they don't speak to each other. I met a treasurer last week, an important one in the pharma industry. He doesn't know who's the new responsible for procurement, for example. And that I realized that, that means that there's not just the workshop to be set, but almost the meet and greet relationship to do. And on marketing, I mean, you know that marketing has a different mindset as well. They're trying to sell. They're trying to be very attractive to the customers. That's normal. So what I see is that the last thing they think about is how am I going to collect the payment? And it's not a criticism. Let me make it clear. It is just that as you're thinking about how to sell more, that's your priority number one. How do you get the money from your customer? It's kind of normal that it doesn't come first, right? So again, if the treasurer can actually bring more examples from what we bring to the table, or other consultants or other banks, I'm just saying that you need to have examples and use cases to bring to the CFO to say, maybe we need to put this on the agenda and the corporation, that as payments are changing, as financing options are changing, we can help marketing, we can help procurement. And the business case, I think, can be done either from only the treasury benefits of working capital. I predict better capital. Capital is expensive today. I'm going to have more cash flow and I will be able to invest overnight more of what I have because I have better control, better predictability. I think the business case can be today very interesting. And it can be a business case about cost savings across the organization by reducing, of course, the reconciliation, the dunning costs, the cost of actually redoing things because you don't have the right data, right? So you can do it in both ways. And last, and this is the silver bullet point, regulation is there. So you're going to have to do it anyways. And you're going to have to spend the money anyways. So the question is, can you show that you can spend it smartly by doing 2-3 changes together as opposed of doing separately? And so this is for me the silver bullet, is that you're going to have to go through this anyway. Might as well do it with the right, let's say, order, with the right geographical scope, with the right organization already, as opposed to doing it first on a decentralized and then have to redo it on a centralized organization, or first in my old version of ERP and then in my new version of ERP, you see? So I think the business case, depending on which company you are, which maturity level of organization you are, can be adapted. But in all cases, my advice is that with the amount of change coming our way, the more you can look at it in a master plan, the better it is for your future business and the better it is for your corporation as a whole.
I love that, Bruno. If I were to summarize, acknowledging the change, and we're going to go through it in a minute, but like typically the things you do at BNP Paribas helps that. Thought leadership, think tanks, or how to like informing yourself on what is happening, regulation-wise, but also what your peers do, is a great way to start because this is happening. This is the start of it. Liaise with the relevant departments. If you struggle to, make sure to put this on the top of the agenda of the CFO. I was going to ask you, how do you actually do that? Because if tax department and procurement department are busy, so is the CFO. But definitely by showing how much not taking action could cost and making a benefit case, that's how you eventually put it on the CFO's agenda because they are interested into how to save substantial amount of money. The marketing points, so you have the silver bullet at the end. It's going to happen anyway, so embrace it now and plan for it rather than just it being a
suffer.
Exactly, suffer from it. How do you, because marketing-wise, it's not only that it's not their first consideration, it can even add friction to the sales. Like if you say, okay, you need to pay us, but pay us via this, following those payment terms, and we do not support this format. That's actually adding friction to the sales cycle. So it's even harder to, close the sale, close the deal. So how do you find the right balance on how to approach marketing department and bring to their attention these kind of considerations?
Yeah, no, but that's an excellent point. So there's a new trend of new players trying to do exactly that, saying, I'll simplify your user journey, I'll make sure there's less friction, and I'll be able to integrate behind all this payment complexity and financing complexity, and I'll make life easier. So it's a very powerful marketing speech towards marketing departments. But if we look at the real data from our analysis at BNP Paribas, it only is my view, I see that payments coming from these actors are 16 times more expensive than what we provide to Treasury. And the financing is 3 times more expensive than what the banks provide to Treasury. So to cut the story short, if payments and financing is done through Treasury and the bank's existing relationship, you have a very good business case. But of course, the question is how to work with the players that are very good at digital integration in the marketing to do the customer journey that goes well, while at the same time benefit from the payments and the financing from other players that provide you a lower cost of transactions and financing and wider financing, because again, you can have factoring, leasing, personal finance. And so those breadth of options are available. And structurally, banks today have lower cost of financing. That's just the way that the economy is structured. Yeah. And that is a business case in itself, basically. So tangibly, there are benefits at working with Treasury for the marketing department to lower the total cost of the transaction and to increase predictability for Treasury so that they can invest overnight. You see, it just builds on, the business case can just build on. Mm-hmm. And the cost of doing this while you have to comply with one of these regulations that touches the client or the supplier. Yeah. So in the end, the question is how to put it all together.
That's the next difficulty.
Bruno, how is BNP playing in all these different spaces then? So you guys are obviously a major player overall. What are you guys doing in around all of these dynamic changes that treasurers are facing, and how are you supporting current and hopefully future clients on this?
Well, we have a very strong relationship with our clients. We are today in Europe, at least, we have a banking relationship with 1 of every 2 corporates, which is great. We've been supporting them on financing through COVID times, and that has created a number 1 market share. So that allows us to as well have the proximity to them to reflect in dedicated meetings on what challenges they're facing. And what we've done from the product side, which is the area that I lead, is what are the regulations, try to really understand what it really means, being very specific. Number two, to lobby not only the regulators, of course, which are not the easiest necessarily to lobby, but lobby with the software vendors to make life easier for our clients to anticipate these changes. Some software vendors have seen some of these regulations coming, some haven't, and we're having to play a role to tell them, please get ready. And working with parties in the industry like SWIFT, like the different European clearing systems, both central banks or European facilitators of payments, to make sure that they anticipate these changes, that they build the services that lower the friction on this, and to create interoperability. And that's key because, again, to give you a very practical example, if I tell you, BNP Paribas tells you, and you're a corporate, I have the perfect solution for you, but you have to integrate my BNP Paribas API. You'll say, well, but I have another bank to integrate and another bank to integrate. Or please onboard this service, but it's specific to BNP Paribas. Well, that doesn't work for corporates. So what we're trying to play is both a role in the industry, to influence the industry to choose the standards, for example, to query the balance of your account. That's something we've done with SWIFT and other banks and corporates. Try to build the standards. Try to select solutions for the client, to tell the clients, look, this is a solution we can provide you, or these are solutions in the market, and these are the best ones for you to implement some of the corporate processes that have nothing to do with banks, or integrate some fintechs into our offer so that we can actually build better user experience on some areas like invoicing or like dynamic hedging, for example, some specific processes. So these are the different ways in which we are working both on the product side, on the industry side, but at the end, it all boils down to the advice. And so we've created an advisory team, which together with products, go and meet clients wherever they are, do workshops, highlight the changes, highlight the options. I mean, the clients are able to trust us with their views, and it allows us to be even stronger when we advise other customers on how to tackle these challenges, right? So that's how we're doing it. The challenge is that there's a lot of changes in the coming 3 years. So at some point, this is going to require as well Treasury to set themselves in project mode. Mm-hmm. And that's really what they need, is they need to have a project mode set up to make these choices, to adapt their systems. Otherwise, in business as usual, it's always very difficult to cope with day-to-day operations and these type of projects that require change and transformation and new systems sometimes. Yeah.
Super clear.
Yeah. Is it clear?
Yeah,
Super clear.
I think so. I like the advisory board part. I think that's a nice way to provide value to your clients or potential clients and to be recognized as experts. One thing I've definitely taken away from this episode is that just how much is going on. Yeah. So there's a lot going on, and treasurers definitely need help with that, I think.
Absolutely. So yes, it's the coming years will be very exciting, and I think it's exciting not just for Treasury, but for banks and for technology service providers. And so I'm sure we will learn from every single step and how to make that knowledge collectively available. I think that's going to be key, and this is where you come in. And I really thank you for this opportunity, because we need to get the word out that it's time to get organized. That banks can help corporates to think through this, but the worst strategy is to wait and see.
And so if treasurers want to find out more about the kind of advice that BNP is offering, etc., where can they go to do that?
Well, if they have a relationship with BNP Paribas today, they certainly should go to their relationship manager, and they can mention cash management, treasury board, cash management, advisory, and they'll make their way to the teams that can advise on this. We do this on a daily basis to have these discussions, and it is just part of having a relationship, really.
Amazing. Bruno, thank you very much.
Thank you so much.
It was amazing.